Welcome to the Daily Update Podcast, where I'll go over the action in the market for Friday, October 10th, and we'll see how things look for Monday, October 15th. First of all, going over the performance for Friday, the S&P 500 took a hit, closing down 2.71% on above average volume, signaling significant technical damage. The index started the day strong, hitting an intraday high at 67.61, but the mood shifted dramatically after news broke of heightened U.S China trade tensions. This led to a sharp sell-off, with the S&P 500 closing near its intraday low at the 65.50 level. The index fell below key support levels and also dropped below its 20-period moving averages, indicating a bearish short-term trend. However, the intermediate-term trend remains positive as the S&P 500 is holding above its 50-period moving averages. The long-term trend remains intact for now. Other indexes weren't spared either. The Nasdaq and Nasdaq 100 saw sharp declines, with tech giants such as Nvidia down 4.89%, Tesla down 5%, Amazon down 4.95%, just to name a few. The Dow fell to its 50-day moving average, while small caps took a heavier hit, dropping over 3%. Most sectors were in the red, with tech, discretionary, and communication hit hardest, while the defensive consumer staples were the lone bright spot, eking out a slight gain. The primary catalyst was escalating trade tensions between the U.S. and China. President Trump announced a potential massive tariff increase on Chinese imports in response to China's tightened export controls on rare earth materials. This news seemed to catch the market off guard and triggered a wave of selling. The VIX has now surged above 20, reflecting rising fear. Short-term indicators, including the stochastics, Stochk RSI, Williams Percent R, have already gone extreme negative, with the VIX RSI short-term now above 70, hinting at potential oversold conditions. Meanwhile, bond prices rose, pushing the 10-year Treasury yield down to 4.05%, a classic flight to safety move. The dollar had minimal impact during the session. Consumer sentiment painted a mixed picture. The University of Michigan's index came in at 55, slightly above expectations of 54.5, but well below last year's 70.5. Market sentiment has dropped sharply to 29 from 49, signaling a bearish shift, and the ADX indicator is now showing a weakening trend that is negative since the red line has crossed above the green line. From a technical perspective, the short-term outlook is concerning. Short-term indicators are deeply negative. The S&P 500 is below its 20-period moving averages, and the parabolic SAR has turned bearish. Intermediate-term indicators such as the Connors RSI and PMO are starting to roll over, suggesting potential further weakness. However, it's not all doom and gloom. Long-term indicators, such as accumulation distribution, remains positive, and the advanced decline lines and bullish percent indexes, while declining, are still above critical thresholds. This suggests the longer-term uptrend is holding for now. Elsewhere, gold is in overbought territory based on a 14-day RSI, while oil prices slipped under 60 and are in the 58 range. What is the outlook for Monday, October 13th? The markets may see lighter trading volume due to the bond market being closed for Columbus Day. No major economic reports are expected. On Tuesday, Fed Chair Powell will be giving a speech, and there's potential that the CPI will be released on Wednesday, but this is all in doubt due to the government shutdown. Historically, option expiration weeks lean positive, with the markets up 73% of the time in October going back to 1980. However, October 13 itself has shown neutral to negative seasonality going back to 2002. Key support levels to watch include the 50-period moving averages and pivot points. A break below these pivot levels, not only for the S&P but other indexes, could signal further declines, while a bounce might stabilize the market. Geopolitical developments, especially U.S China trade news, will likely remain the dominant driver. In conclusion, Friday's market action was a stark reminder of how quickly sentiment can shift. The S&P 500 is now negative in the short term, with significant technical damage and heightened volatility. While the intermediate and long-term trends remain positive, investors should closely monitor key support levels around the 50-period moving averages and stay alert for any updates. For Monday, caution is warranted, but a potential bounce could be in play if support levels hold. Thank you very much, and I will talk to you in the next podcast.